statistically, we're heading into one of the worst months of the year for Bitcoin. And statistically, we are in the worst month of the year for the traditional markets, the S&P 500. So I'm going through that data with you today. Also going to cover, obviously, the stock markets, Bitcoin, and altcoins, looking at some majors here on a longer term time frame, and then I'll update that again at the end of the month and give us a bit of a forward outlook, a bit of a roadmap for March. So stick around on the channel, like and subscribe. As I said, it's your home of macro cycle analysis. Let's dive in. First up, forecasts for 2025. I leave a link to this in the video description. The reason I bring this up at the beginning of the video is just what I had talked about for quarter one, or at least my thoughts for quarter one of 2025. We saw the 3-day or 3-bar rule happen again in December of 2024. Here's BTC on the daily chart. That signal came up right here, 1, 2, 3. So if you are new here, it doesn't have to be a red bar. It's just a lower high, lower low from a very significant turning point. And that's for the Bitcoin chart. So it's these 3 right here. This said things are going to be tougher than what the majority anticipate. And this came up at the tops. Of course, you know, there was calls from Cathie Wood, from Michael Saylor, from any of the big names saying Bitcoin's going to go to 500, 750, 1.5 million, 1.25 million. I don't know, Saylor's call of 13 million. You know, it's always at those peaks. And then you get these signals from the market, not my opinion, just from what we've seen and what we've used on the channel here in real time. So not hindsight, not the 2020 stuff, all that sort of thing. This tells us that there's probably going to be some sort of slowdown. As I said, that was around mid-December. Funny enough, the top came in on the exact same top of 2017. It was on the 17th of December. And in 2017, the top for Bitcoin came in on the 17th of December. We've got a slightly higher high here, and the same sort of rhetoric, sentiment BS came up. You know, Trump's coming in, the inauguration. How can you be so stupid? This thing's going to go to the moon, and you know everything else is going to go ballistic. You know, this time is different, aka Trump's here. This time is different. So I saw those 2 things at the tops, and when Bitcoin's price comes down, you start to see the opposite. It's over 60K. You see the comments, people saying, you know, we've got to have some big crash, some big flush out of the market. It's going to come back down, hit 60K, whatever it might be. You know, at the time it's 74 when it's up around here, and then the market comes down a little bit more, and they say you see the comments move and they shift and they say, oh, now it's got to be 65, now it's got to be 60, that sort of thing. Right now, the price has been basically the same since the 5th of February, so nearly 20 days. It's basically been the same closing price, very minor changes here, but a lot has happened in that time. Obviously, over the weekend, we had the 1.5, 1.4, whatever people are looking at here, huge amount of money or huge amount of ETH getting hacked from Bybit. I've put this down as another nothing burger for Bitcoin and just another piece in the puzzle of the wall of worry for the bull market going up. Now, it doesn't always feel and seem like a bull market. Of course, for the last almost 20 days, the price has gone nowhere. But when it's time, then you get the feeling of a bull market. And you get a feeling, which is where these sentiment indicators come from. This is where you see the headlines of the stupidity of how high the price could go. Now, it could always get there. I hope it gets there. But I don't think it's going to happen at the times that these people say it is. You know, they're looking for either 2025, 2026. Some of those calls are even out to 2030. I think it's a big, big ask for Bitcoin to more than 10x in the next sort of 5 years. So that's a bit of a starting point for this video, looking at the worst month of the year. That's for BTC. And of course, I've got to get to the statistics for the S&P 500 as well. With the worst month of the year coming up, we can see that from the forward returns here. This is on the TIA dashboard. So if you are a TIA indicator suite subscriber, you can check this out on your dashboard. I've turned off 2025, 2010, and just having a look at the numbers down the bottom here. You've got March and December, both at 50-50. So basically it could be a red month, could be a green month. 50-50, toss your coin there. And for February, one of the best months, right? It's at 78. I think it's the best month that Bitcoin has. For now, Bitcoin is in a red month here. So it's 5.7%. It's down to 73 here. So I'll just turn this off again because we don't have complete data yet. And looking at the worst months, basically these two here, that's your August and September periods with less than 50% of the time being green. But we're interested in this first quarter of the year. And as I went through at the beginning, the forecast that I did in late December, the post here is on the 2nd. I've got the video here from the 30th of December looking at those signals. And this suggested that it's probably not going to be as clean of a quarter as what the majority had anticipated based on previous history that I guess they look at, saying, well, the first quarter of the year is typically green and it's going to be straight up like what we saw in 2021. This time, however, we didn't get there. And well, there's still a month to go. Maybe we do get there, but it's been a pretty rough ride. I think many would agree that it's been a pretty rough ride for BTC over this first quarter so far. We're nearly 2 months down. Obviously, a quarter is 3 months. January started here, and you basically had a couple of new fresh-ish lows, a couple of fresh highs. We got another all-time high on the 20th, back down, and it's pretty much been a bit of a grind. Now, I think this is going to work out well in the end. And in these worst months, I should have mentioned this a few minutes ago, these worst months are the best time to be in the market. Unfortunately, and it is confirmed now, a lot of people have given up. They've left the market. They were too heavily involved in altcoins. They got destroyed in meme coins. They got too greedy, make life easier for yourself. The point is, it's your money. Do the best you can with it and don't get greedy. Don't be stupid with your money, because at the end of the day, you got to factor in how long that is going to take you to build that money back. And so the easiest thing to do is just keep it simple and just ride with the trend. If you look for get rich quick schemes, almost 100% of the time in cryptocurrency, it could probably be 100% of the time, it will fail. Tell me in the comments down below if you've held it for long enough, if it actually has worked out. I haven't seen anything work out for the long enough period, but maybe for the short term, a few days, a few hours, a few weeks, a few months, it works out if you're quick. But over the long term, 100% of these things, I'm changing my mind, 100% of them will fail. If you look for the get rich quick thing, it'll fail. That's up to you if you want to do the gambling thing like the Aussies love their little sports betting apps. So quarter one, my long rant about that is that I think quarter one, based on what we saw in December, was going to be a tricky time. And so far, that has been exactly what has happened, although there have been many, many calls for that. So February isn't a fan of post-election years. This was posted on the 3rd of February, so 3 weeks ago. I think it's important to revisit the statistics to see whether they've worked out or not. And if they have, then you can use it moving forward. That's the whole point of what I do, my analysis, study the past to forecast the future. If the analysis has been relatively, it works out in your favor more often than not, and even if it doesn't, you're able to use it in a positive way for your own results, well, then keep working with the data. And at this point, February isn't a fan of post-election years. It's suggested that February was going to be a negative month. Even so, the way I like to use this is, was it an easy month? You see there are other months that are quite easy, like your old October. They generally go up, so it's a little bit of an easier time, and that's quarter four generally is a bit of an easier time. You see the markets tend to move up, and they also put in highs, as we looked at in yesterday's video. But here, February 1.3, March might be a turnaround month here with a 0.8. So for March, we often see some lows come into the market. Now, we've got this on a monthly scale here for the S&P 500, just as a couple of examples. Last year, we saw, not last year, it was 2023. We had the banking crisis come in. In 2022, there was a peak here, and then the market reversed. COVID, you had a huge month there. That was March. We can go back a couple of years prior. You've got the GFC low. Some pretty significant lows happen in March. And, I've gone through that data before. You often see the lows around March or towards the end of the year as well. In October, even though October can also be an October month, essentially they are volatile periods in the market. And it seems like for now, there's a bit of a waiting game here. There's not really anything going on. We can see from the charts that we've been in a holding pattern now for Bitcoin since November. For the S&P 500 since November as well. Here is my daily chart. I've got the day count at the top here. There's 108 days. That's 3.5 months. Here is the price right now. Market's just opened. It's at 6,051 points. And you go back to the 8th of November, a couple of days after the election, and the price topped out at 6,040 points. The next day you had 6,053 and then a slight correction here. So really when you look at it, the price is where it was 108 days ago. Yes, you had some declines, had some new all-time highs, declines, more declines, DeepSeek, tariff fears, more tariff fears, Middle East fears, new all-time highs, another new all-time high a couple of days ago, and then Friday decided to kick the bucket, whatever the saying is, shit the bed, and come back down a couple of percent, 1.7%. Now I'm going to get through that short-term daily analysis in just a moment, but I want to finish off with this because in these worst periods, as I said, the market participants, at least retail, they piss off. They're done. You can see it from the markets there. The altcoin buyers had enough. They got greedy. They're out. They don't have enough money left to put into Bitcoin. They just said, screw it, I'm not going to look at these markets anymore. And at these lower points is when the market turns around, it starts to consolidate, and then it starts to work its way higher. Look at that. February, 1.3. As we said with March, sometimes you see these big flush outs, and then there's a big recovery in March, which is why March can also have, can also be an average return. So it can still be blue, but we know within the month of March, there are some pretty, sometimes decent corrections in them. April comes along, May comes along, June comes along, July comes along, August down, September also down. Sometimes October spikes down, then closes higher as it did in 2022. And then Q4 starts to work its way higher. So sometimes you get a bit of a pattern like that, a bit of down here and then February. So you end up with this market that the masses rush in towards the end, then they get washed out, then they rush in towards the end, then they get washed out, rinse and repeat year after year. And I had another one here looking at the US net capital inflows, total private purchases of US equities, $1 billion, 3-month moving average. Now, the interesting point about this is foreigners bought $76.5 billion worth of US stocks over the last 3 months. This is 27th of January, so a month ago. The fastest pace in history. So again, I'm just looking back to see whether this has played out, because all this stuff, you can pick up any chart, anything online on X or YouTube, and it seems like a fantastic point in the real, in the moment. And we do look at a lot of that here, but I want to go back and just see whether it actually has worked out. Historically, they have unfortunately and have had poor timing, having bought right before the 1987 crash, the 2000.com bubble, and the 2008 global financial crisis. I'll get my damn words out. So there is another peak. There is another peak. There's 2000. There's 2008. That's 1987. Obviously, it doesn't look like much on the chart because the world has been printing a crap ton more money over the last several decades. You've got another peak here into 2022, and here we are. So with that in mind, a month later, we just saw that the market has really gone nowhere. There is January, here is February, we're nearly at the end, and it's decided to shit the bed towards the end of the month. And this one here, again from the 3rd of February, thanks to Ryan here, looking at the second half of February can be trouble, can be the trouble, right? 15th on its way down. Pretty good times into Valentine's Day. There's your Valentine's Day. Hopefully you had a good one. And then towards the end of the month, it starts to come down. Now, it doesn't have to follow this exactly. This is just an average over the last 74 years. But the second half of the month has been a little weak. We're not seeing too much in terms of any announcements here from the US, anything really important. These are high impact announcements, but might just be short-term volatility for intraday traders, right? Average hourly earnings, non-farm employment change, so non-farm payroll, employment rates are coming up next week. And then the week after that, some more USD calls here, CPI, core CPI, job openings. What else? We're looking forward to the federal funds rate on March 20th. So maybe it's a bit of a shit show until then, and the markets go a little bit quiet. If they do, well, we've got a couple of support levels down below. The closest one here is around 6,000 points. The next one, 59.40. So that's the 100% move to of this double top, which comes out at those next lows that happened on the 3rd of Feb. And then a couple of extra points here, 5,900 thereabouts, call it 5,890, so 5,900, and then down at 5,800, 5,700 previous support levels, and the 50% level has changed slightly over the last several weeks with the higher highs, is now at 56.43. So even if we see this shit show over the coming weeks and Q1 doesn't turn out to be as positive, well, you still got lots of support to the downside and nothing that would change the macro picture here. Nothing's going to change the macro trend with these support levels, and it could come down 8.5%. That's all the way back to these previous tops of July and September. The big one that I'm still looking at is 51.20. So that is the Japanese yen carry trade fear low. And that's where I'd start to get a little bit cautious. We see closes underneath 5,600 points. Let's revisit this point. But for now, I'm preparing for what I have been looking at the whole time. The market really hasn't done anything based on what we saw in 2024 in December when we saw the 3-day rule. And these are basically all the updates from that point that you can go back and revisit if you so wish. Otherwise, you can take my word for it on this particular video. So with that sort of like bad news there, worst month, February's March. If you've made it this far, firstly, like, subscribe if you haven't already. I'm sure most of you have if you're this far into the video. But I'll give you the good news. What happens next? Well, at least from the data and the way I'm playing the market, it's obviously your money. You're free to do whatever the hell it is you want to do with your money. But I guess you're here and you want to understand what I'm doing and what I'm looking at. So the coming months, as we've looked at, is there's a high chance that you would see another new all-time high on the stock markets, and we would see an final peak, right? There's a much higher chance over, what's that, 52, 10 and 10 is 70, 75. It's like a 75% chance that you would see a top in the market in the last 4 months of the year. Very low chance that you would see a top anytime between now and August. Really 2, 4, 6, 8, 10. Basically, there's a 12% chance that you would see a top for the S&P 500 in between February and September. So again, let's look at the statistics. Probably likely to be sometime towards the end of the year, if not into the following year, if not into the following year at the second half of the following year, being 2026. So plenty of time left on that. First part of the video, looking at all the worst case stuff. Worst case things usually lead to people leaving the market. People leaving the market usually leads to lows in the market, and then lows usually lead to consolidation and then further upside. So if you're still here, fantastic. I believe you are now going to beat 90% of the retail market at least, and probably a lot of the smart money too. A lot of the smart money do the same things. You see it on CNBC, you see it on CNN, you see all these Wall Street analysts have been calling for recessions for the last several years, and the prices keep going up, and then they start to call for high bull markets as the prices break out or get to some tops, and then the market reverses, and we really haven't gone anywhere over these last few months. And there's been a lot of positive news. Okay, how does that affect Bitcoin? What does that mean to Bitcoin? Well, I'll keep it simple and I'll leave it up to you to debate in the comment section. But I'm still of the view that Bitcoin follows a lot of what the S&P 500 does, and they're kind of in sync in a longer term fashion. And when the trend becomes clearer for the S&P 500 and you get these nice strong moves to the upside, well then Bitcoin generally follows suit. If not, maybe it starts about a week or so earlier than the S&P because it's had a harder time. For example, in October 2023, the S&P 500 was still coming down here. This is Bitcoin in the orange. So Bitcoin was still having a tough time. It bottomed around September, had a higher low in October, and then started to take off. That's Bitcoin, right? Started to take off. The S&P had to come into the second, third week of October, and then it also started to take off. But it had been going for that entire period out of that March low, running into a top here in July, whereas Bitcoin was basically sideways for that 7 to 8 months. Runs into a top, Bitcoin does the consolidation, the S&P stops around the same time, pushes higher, pulls back, pushes up again, doesn't get a new high, but it's basically going through its own type of consolidation before it pushes to new highs. Whereas now we're seeing a similar sort of thing here for the S&P 500, where it hasn't really gone anywhere since November. And you could argue that, well, Bitcoin hasn't really gone anywhere since November either. There's the November price of, the 13th, high there of 93,500. As I'm filming this, we're at 96,000. Yesterday, we got to a low of 95,200. And then just a few weeks ago, the low there was at 91,000. So it came all the way back into that price of November. So it has gone up, it has gone down, the up, down, sideways thing, but it's really been churning sideways. No one can debate that. And I believe it's been churning sideways because we've seen multiple exuberance, mini euphorias. I'm not calling the end of cycle euphoria, but mini euphorias. And then this one big signal that I fall back on a lot because it's worked very, very well. And why wouldn't you when it's worked very, very well? The 3-bar rule, in this case, 3 days off a very significant top. That says things are not going to be as they were previously and trends are slowing or changing. And we definitely saw trends slow. That's confirmed now. And you've seen them change in the short term, at least to the downside. We haven't seen any more really big moves up that have taken out the tops and continued on. So what do you do from here? My suggestion is, as always, don't leave the markets. If you found yourself in a bit of a shit show with altcoins and meme coins, do whatever it is you can to remain with a market. So watching the trends, watching the markets, because when things come back, I think they will, I could be wrong, but when things come back, that's going to be what you can fall back on to understand what has happened in the past so that you can see and feel more confident with where things might be going next. The folks who jump on board again later are going to be rattled. They are going to have their emotions flipped upside down multiple times. Whereas you've possibly gone through that here. Maybe you've been with it for over 12 months and you've seen it happen in 2024. You were able to ride this part up. So this is kind of becoming somewhat familiar. And if you do see a flush out to the downside, well, then it might not freak you out because you may have seen multiple times where this has happened. And then you can start to identify when the strength is coming back into the markets. So where could these flush outs occur and where could they drop to? I've got a couple of prices for you to watch out for. The downside here, I'm looking at the previous lows. We've seen a fair bit here, 94K. These are the short terms into the larger correction numbers. The low that happened on the 18th of Feb was at 93,300. And then the previous couple of lows, which have so far been higher lows, you've got 91,200 and 89,000. Now they're kind of the rudimentary things that everyone can look at. Everyone can see previous support and resistance. Some might understand, if you take it the next level, some people might understand which ones are going to be stronger for support and resistance because not all of them are equal. Some of them are going to have better strength to them. Looking at weekly lows here in particular, you've got the 2, that's at 91, and the next one at 89. And then obviously the monthlies as well. And so at the moment, still in a bit of a trading range here. Now, if it happens to remain in this zone, great. You've got a bit of a bull flag forming, but it's still underneath the 50% here at 99K. The strength the market still needs is to get back above 99K for the first target and then above 103. I haven't changed this on the chart for weeks, if not a couple of months now, because it's basically been the same zones for this entire period. To the downside, again, support could come in at 89, which is the low, or 90,500. So that's my 50% extension on this weekly extension here, looking at any of the short side. If it fails, find support at 90,500, I mean the short side fails, then you've got a pretty strong market there. If you get a bit of a flush out of these lows and it holds above 90,500 on a weekly closing basis, so they're the important parts to remember, then you're starting to see a pretty strong market there. Sure, it could go lower, but you've got the confirmation that buying is stepping in and trying to hold price above 50%. If it slices through these levels, quite weak, more chance it's going to come back and revisit 79 to roughly 81,000. Neither of those things have happened yet, but at least we're prepared for either of those movements. 81's the 100% level, and 79 is the 50% level of the, August low to the January top. So a pretty clean, balanced move should it happen. And if it does happen, that would be a 26% down to about 27%. So still a a less of a correction than anything that happened in 2024. I would call it pretty settling to know those prices, because if the market does come down in the type of sentiment that we are currently in, you could bet that this would drop into fear, potentially even extreme fear, which would be resetting the market. And right now, it's trading around neutral. This is the Crypto Fear and Greed Index. I've pointed to this multiple times over the last several years, going all the way back to, I'd say, starting around late 2020. So I've been using this for over 4 years now. And many times people disagree and they say it doesn't work until it works again. Well, it's always been working, but they just don't see how it's working. And this thing typically comes back to reset, at least into fear, sometimes into that extreme fear, especially after such a long prolonged downtrend here. Now we're also seeing the markets reset with the liquidations. Very small over the last 24 hours at 120 odd million, but on the Bybit hack day, it jumped up to just over $500 million. So typically that's what you want to see to get some sort of turns in the market and basically a point of reference for anything coming up in the future. So we know that we can still see more money get liquidated. We've seen the $500 million on the 3rd of Feb, so 3 weeks ago, we saw that $2.2 billion. Maybe we're not there yet, and I think that's possibly because of the sentiment, and then also the exchange volume hasn't ticked up enough yet. Could be putting in a few lows here though. So this is some of that positive stuff that I'm looking at. $40 billion so far, $42 billion as a low, a slight tick up here for $46 billion coming in on the Bybit hack day. A lot of people trying to sell off. Exchange, withdraw, and really it was all a bit of a panic. Bybit has done all of their withdrawals, so all of those have gone through. Looks like they're buying back some ETH, and well, the markets have bounced back a little there. Bitcoin's bounced back as well. It just seemed like it was a whole lot of panic for not really understanding what was going on there. Now, in terms of the lows, maybe we do find some lows here in the 40s and we start to put in some higher lows like what happened last year. And then when you start to see it get put in more higher lows, that's an early indication that the market could be turning around. We'll start to see some higher prices. As always, the majority of retail had given up here. They were destroyed on this point. They've been destroyed again. And I suspect they'll come back when the market starts to push higher. Something else that hasn't reset completely yet is the USDT dominance, one that I've been following a lot for calls on the market. We haven't seen it test this top yet, around 5.1 to 5.2. Obviously, if the dominance goes up, bearish for Bitcoin and cryptos. If it comes down, massively bullish, money flowing out of USDT. They're not as risk adverse. They want to get in and start to gamble on everything again, maybe get destroyed. So for now, we really haven't seen too much going with the USDT dominance. I would say I'm leaning on the side of further upside for the dominance, meaning downside for Bitcoin and cryptos because of where it is currently positioned. And you can see these tops and where this period is now consolidating above. It's basically sitting on top of the previous top, so potentially becoming support. Now, it hasn't broken out of this level or the 50%. Therefore, it's cautiously bullish on USDT dominance. So keep that in mind in case we do start to see things higher. That's basically what's been, what's been consolidating here. Now, the video's gone on really, really long. I'm going to do a deeper dive into ETH, Solana, Sui, XRP, but for you guys that have stuck around until the end, we've got 5 days to go on the monthly chart here for, all your favorite major altcoins. ETH is doing an okay job here despite what has happened to it over the last couple of days. I said I was going to go into a deeper dive in future videos, but here we are. 2 increased volume days after the big flush out. That was the flush day, the Bybit hack, 1.5 billion of ETH, and look what happens the next couple of days. It goes up on increased volume. Now 2,900, that level is still there. For a closer look, is 2,930. That's really my key level there. That's where my alert sits here. 2,930 is what I'm looking for. That's where I want to see the price close above. But yeah, the weekly's not looking too bad. It's had a couple of big moves up, bit of volume there, higher close. And then the monthly is also not too bad, all things considered. Solana doing a little worse here. Big spikes out to new all-time highs and then big closes and big reversals on the weekly. Terrible. Red, 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 red. No new highs here. and all new lows. You've got an inside, down, down, inside, down. So this is not great for Solana at all. And it also had the signal back in November, 3 bars down on the daily and the weekly. Yeah, you get a spike, you get all the hype, but it did not push through. So for short-term trading, fantastic. For long-term, I'm going to buy and hold, and this thing is going to make me a gazillionaire. This signal told you probably unlikely in the medium term, and for the majority of people, I would say that November through to February, for them, feels like long-term. But yeah, this has basically been absolutely crap for many, many people hoping that Solana is going to boom. 200 needs to get above 210 is the real number there for any closes. And I suspect with this sort of movement over the coming days or weeks, I'm going to continue to follow this to see whether we hit that 150. I'd say we're going to hit that 150. Keeps getting rejected at a lot of these shorter term resistance levels. So I suspect it's going to come and test at least that 150 level, as we've been talking about now for many, many days. SUI is holding above 50%, but it did have a big wick up, and we had covered in real time that it was likely SUI was going to come back and test some lower prices. I've enjoyed this time to scoop up some more. You can see the lower volume here on the red months, which is a good sign that this is just needs more time to rest, and then we start to go again. Look at the low volume that happened when SUI last time came down, and then you see the reversal in the increased volume. It just takes time, and a lot of people in crypto don't have time. They want to leave their jobs yesterday. They want to, take off onto some overseas holiday. They just hate what they're doing, and that's essentially why a lot of people do come into crypto. Hopefully that's not you. If you want to take it a little bit further, maybe something long term for your trading or investing, you just want to learn, check out TIA Premium. Links are in the video description. Like and subscribe. Here is your last one, XRP. It is one of the stronger ones at the moment. It has come down, tested those tops, and it had a relatively strong close here. It is on my watch list. It is something that I'll be looking forward to coming into this next cycle, this next stage of the cycle, should we see the moves up. I suspect we'll get to a new all-time high finally. And the XRP BTC chart could also be setting up for a breakout of 3,300 Satoshis. So the previous top there is 3,400. Lots of tops here that one's at 3,000 Satoshis, 2,900 Satoshis, a few more through this period here. And I'd be looking at something in the vicinity of high 4,000s, maybe even 6,000 Satoshis, which in terms of a percentage from where we are here, could be something like 75% more than what Bitcoin would do. If Bitcoin goes down and this goes up, well then it's a difference. It's going to be different on the USDT anyway. But looking at if this was all going up together and XRP BTC goes up to say 6,000 Satoshis, that's a 125% move greater than Bitcoin. So I'm very interested in a chart that looks like this now. This is sort of the breakout. It's confirming something. It needs to break out of 3,300, 3,400, confirm that as well, and then start to move into some of this empty zone up here. Like, subscribe, see you guys back at the next video. There is a video popping up right here for you. You can watch that one next, and I'll see you very soon. Cheers.